Good afternoon. This is Todd Horwitz coming from the floor of the CME Group in Chicago, and we continue to track the 30-year bond. And of course, we see that basically overall the fear is gone. Although they are much higher today, I think what we're really seeing is a true lack of fear. You know, we've been churning around between 155 and 157 in the December 30-year bonds, and no matter what goes on, we've got Kim Jong-un doing his thing with the H-bomb now, and he continues to change, but there has not been a real driver of fear. Yes, there's a big rally today, but of course, Friday on the jobs number was a big sell-off. So really, we're just churning this consolidation pattern, and we think we're going to call the top is in here and, you know, look to be a seller at the 156, 157 level. Anywhere in there, anytime we rally there, we want to look to be sell, because I think selling rallies is the way we look for here. Overall, we've got, you know, the ECB is meeting this week. We've got a whole bunch of things on the docket, and yet interest rates remain dramatically low. And of course, if we're going to see a pickup in the economy, then interest rates have to rise to create the demand for money and to get it going. So what we see is that interest rates should start to rise here, but it'll start here first in the treasuries. And as we continue to watch them churn between this 156 and 157 level, we think it's a great opportunity as we look for much, much lower prices, you know, in the near future. Now, again, it's not going to happen overnight, but overall, I believe that you've got a lot less risk if you're carrying these to the upside and trying to be short versus trying to buy them. I think that the overall yields are at ridiculously low levels, and I think we're going to continue to see this push up in rates once we get through this little time period here. But again, basically what you're looking at is a market that is in a consolidating period up near the upper ends of the range, which means that we should start to see break and start to test some of those lows. And I think our first target would be probably 153 and then 151 and far below there. But overall, the theme here is we want to sell into rallies, into strength when they get to these ridiculous levels, and we start to see the 30s down at 2.7 and the 10s down at 2.1. That's the way I see it. This is Todd Horwitz coming to you from the floor of the CME Group in Chicago.